Hello and welcome to this edition of Closing Trades. Tracking markets very carefully as the provocation from Pakistan definitely has not ended well. India continues to retaliate and we are on the vigil. So can't really say that it's a ceasefire just yet. Let's see what happens today. So far, we haven't had any updates. To 60 points low on the Nifty, the futures are still managing to cling on to that 24,000 level. The spot Nifty, of course, has been hovering around that mark. It's really been a very stock-specific day. Titan, L&T, all reacting to their earnings. A big fillip coming in for Tata Motors with regards to the FTAs getting signed, both with India and UK, and then UK and US as well, decision which came out last evening. That stock moves up another 3.5%, and it's back at that 700 price point. Other than that, there's of course, a sentimental knee-jerk move coming in on the defense names led by BEL, which is holding up about almost 3% or so. The market breadth, of course, is weak, and you've not really seen the India VIX cool off at all. In fact, it's still pretty much at elevated levels. But that said, there are dots of green there too. Union Bank, Yes Bank, Bharat Forge are names which are holding up. There you go. After that 11% spike, the India VIX still at the 2.5% gain mark. And we are still sitting at elevated levels over there. Indian Hotels, M&M Finance, DLF, Apollo Tires, MCX, pretty much most sectors other than chemicals and banks. ICICI Bank is lower by 3% right now. It's your top drag on the index. There's Adani Ports, Ultratech Cement, Bajaj Finance, Trent, Reliance down 2%, Axis Bank, HDFC Bank. It's the large caps which are seeing selling, other than, of course, the earnings reactions which are still holding up. But let me welcome on board Mukul Kochar, Head Equities at Investec Capital Services, joining in on the show right now. Mukul, hi, afternoon. Thanks for your time. Mukul, uncertain times. I mean, we still don't have a resolution to what's going to happen to Trump's tariff, and now you've got this India-Pakistan situation as well on your head. Besides the knee-jerk reaction, do you think this is really going to change the tide of inflows, which have just about started coming back to India about a month or so?
See, broadly speaking, if we go to the period right before the current situation that we're facing with Pakistan, India was an economy that stood out from multiple perspectives. Our industrial activity was growing the strongest. We seem to be, on a relative basis, a beneficiary out of the US action on trade. Our bond yields, interestingly, across the yield curve were coming down, which indicated a reduction in cost of capital. And this wasn't a bad reduction. This was happening with an acceleration alongside an acceleration in economic activity. So broadly, from multiple indicators, before this action with Pakistan started, we were looking pretty good. And I think. Barring this interlude, whatever happens, I know this will get resolved. The economy is actually on a very strong footing. So, and we can talk more about that. But yeah, per se, I think the market and economy outside of this, action that we're having is actually looking fairly okay.
The markets and touchwood have been quite resilient in last 3 days. Even we don't know which way things could move. I hope they do not, accelerate and they do not escalate. But markets, despite geopolitical concerns, some would say have been surprisingly resilient. Why is that?
Because the fundamentals are exceptional. Yeah. So let's take a look at our current account. Our current account, I think in the March quarter, as the number comes out, you will see that the number is actually close to neutral. This alongside the news that more and more electronic companies are increasing sourcing from India. We just signed a BTA with UK that gives some sort of, encouragement for textiles as well. So our external situation is pretty solid. Yeah. If our external situation is good, that actually sort of gives some strong support to the rupee, which is then translated into lower inflation, lower, bond yields, which means lower cost of equity, and then the recursive cycle starts. So the fundamentals outside of the situation we are facing with Pakistan today are pretty good, and that's why the market, I think, has reacted quite positively in this. I mean, on a relative basis.
My next question is that FIs, they've been back and they've come back at a time when nobody expected them to come back. They sold when nobody expected them to sell, but I mean, that's the reason why they're called foreigners. They do what they want to do. What is your understanding when you speak to some of your clients and some of the foreign institutional investors you interact with? Are they back? Are they here to stay? Could this party could be a late party, but will it continue for an extended period of time?
So, the investor world is in a way relative as well, right, Nico? So, because, last year, if you saw, the outflows happened because there was expectation that China will come out with a very strong stimulus to support its consumer. And combined with low valuations, the emerging market money went from India to China. India was just seen as expensive. I don't think there was broad concerns around what was happening with the economy. It was just considered expensive. Capital moved to China. At the same time, US exceptionalism was a very, very strong theme, and capital was going back to the US. So as capital flew from India, our capital flight happened from India. The INR started taking a hit. So it became, we have a statistic that, the number of days you had outflows from September last year over the next 6-month period touched 83%. So 83% of the days over a 6-month period, we had net outflows from India. Yeah, so very strong sort of trend on that side, just driven by two factors: that on a relative basis, India was expensive, and there were two other markets, which are large markets, which were looking pretty attractive. If you take this forward, China and US are mired in a trade war. US from a 2.8% economic growth in 2024 calendar years, looking at 1.2% in 2025, clearly slowing down. China similarly is definitely going to suffer from the trade war, so similarly slowing down. So both these markets are looking less attractive. So and I can say that about a reasonably large number of other developed markets as well. So India in that respect is looking relatively better, and actually, honestly, I would say on an absolute basis better as well. And that's what's different between the 6 months preceding March, where investors were fleeing, and now where India on a relative basis is looking a pretty attractive market, I would say, in terms of valuation as well as fundamentals.
So, Mukul, tell me, where is it that you find valuation comfort right now to put some fresh money to work?
That's right.
So where exactly sectorally are you seeing those opportunities where there is still valuation comfort and growth visibility? Either there are bottom-up stories or contra bets or anything that's got, going for it, or where you can still put fresh money to work?
Yeah. So, even on an aggregate basis, honestly, on a large cap Nifty stocks, they're trading at roughly 19, 20 times 1 year forward earnings, which is in line with your last 10, 15-year average. Then if you look at forward growth, we're looking at double-digit growth, broadly for the indices, BSE 500, if I look at. So essentially, even if you retain the same multiple in roll, you will get double-digit returns. Yeah, at a time when 10-year bond yields is touching 6% or 6.1%, 12, 13%, index return is actually fairly reasonable. I mean, it actually sort of is in line with a long-term risk equity returns that you get, or equity risk premium that you can expect. So markets are pretty fairly valued today broadly. Yeah. So that essentially means there should be reasonable ideas to pick from, reasonable sectors to pick from. We like large banks. We like some government banks as well, which is sort of a little bit of a contrarian bet today. We like some home finance companies. Insurance, life insurance is looking fairly good. Then, on the other hand, there's clear earnings acceleration that we see in the auto space, and some of these stocks have corrected. So valuations are looking fairly reasonable. Pharma is looking attractive. We like some oil and gas plays. So there's a broad, when market on an average is fairly valued or reasonably valued, there's a broad, I think, spectrum of stocks to choose from, especially in the large cap space. Even in the mid caps, we've seen some correction, and we see a healthy environment, at least for stock picking, even as the broad indices in the mid cap actually they remain expensive.
Sure do. But so good having you today on the show, Mukul. Thanks for your time as always.
Thank you very much. Thanks for having me.
Okay, still ambling around that 1% downtick mark and trying to resurrect back to those 24,000 odd levels on the Nifty spot right now. But we're going to take a very quick break on that note. But Indian market remains relatively stable amid the heightened India-Pakistan tensions as well, although rupee is suffering its worst decline in about 2 years, prompting concerns about foreign investment amid the ongoing conflict. Let's hear out what market veterans are penciling in for these times of volatility.
So there's greater confidence that India's story is, unabated. It is continuing. So it's very happy to see that long-term investors are getting that vindication. So market will show that underlying confidence. And at the periphery, in the tactical world, it will have to continue to respond to this news-filled world.
I don't believe that this geopolitical conflict has the ability to kind of alter the direction of India's long-term uptrend, and it's great to kind of once again see this that the markets have essentially taken this in our stride and are deciding or moving on, choosing to move on from here. So I clearly believe that not to really concerned about the impact of this geopolitical conflict.
Trump created uncertainty, and therefore people want to go out of US. Therefore, they want to come into my market. And if they want to come into my market, the natural first port of call is the financial sector. Because A, that is the thing which the FI has sold for 2-3 years. B, they like it, we know it because they still have large position. And C, that is the group which is like a macro call, which doesn't have, which has reasonable earnings growth and does not have any slowdown related with it right now.
CY25 can be higher than CY24, December 2024, or maybe answer could be yes, globally, okay? But what is very important for us to understand, this year is not about market or market return. This year what you have to watch is only about currency and global yields. We have to look at the more of a global macro perspective from a medium-term perspective rather than just looking at the equity market. I think the currency market and yields market will drive the equity market rather than the other way.
In association with SBI, be alert, be scam safe.
हम संगम राय लेके आइल बानी एगो ऐसन शो जहां होई बहुते बवाल, बहुते मस्ती और ये ढेर सारा गाना भी देखल जाई। भैया जी धमाल हर शनिवार रात 8 बजे सिर्फ जूम पर।
नीचे नीचे डक्कर, ऊपर स्टेयरकेस के ऊपर।
आप कौन?
टीम गर्मी ब्लास्टर्स। हम आपको हराने आए।
बड़ी कॉन्फिडेंस मानना पड़ेगा।
बैग तो ले आओ।
ब्लू स्टार है ना? फास्ट कूलिंग इन्वर्टेड एसी फ्रॉम ब्लू स्टार। अरे गेम ओवर। ब्लू स्टार गर्मी की छुट्टी।
Look at that. Crowders opens big every time. Can you believe it?
अभी तो शुरू हुआ है.
Getting the right start is half the win.
Be it a savings account or a current account.
Start big, grow bigger. The latest in tech ensures seamless account openings with City Union Bank. Game on, bank on.
उत्तर प्रदेश सरकार राज्य के परिषदीय विद्यालयों में 1,93,00,000 बच्चों को दे रही है शैक्षिक नवाचार एवं गुणवत्तापूर्ण शिक्षा का लाभ।
हमारे स्कूल के हर एक क्लास में स्मार्ट बोर्ड्स हैं और न सिर्फ स्मार्ट बोर्ड है बल्कि उस स्मार्ट बोर्ड पर पढ़ाने के लिए हमारे टीचर्स भी आज स्मार्ट हैं।
उच्च शिक्षा के साथ साथ बच्चों के शारीरिक और मानसिक स्वास्थ्य के लिए खेल के मैदान भी कराए गए हैं उपलब्ध। बच्चों को संतुलित आहार प्रदान करने और उनके समग्र विकास को सुनिश्चित करने के उद्देश्य से प्रदेश सरकार द्वारा स्कूलों में दिया जा रहा है पौष्टिक मिड डे मील।
यहाँ पर कई सारी सुविधाएं
उपलब्ध हैं, जैसे कि पीने के लिए पेयजल जो हमेशा स्वच्छ और ठंडा आता है। दूसरा, यहाँ पर शौचालय बहुत अच्छे हैं।
प्रोजेक्ट प्रवीण के अंतर्गत प्रदेश के राजकीय विद्यालयों में छात्रों को दिया जा रहा है कौशल विकास प्रशिक्षण। उत्तर प्रदेश सरकार प्रदेश के बच्चों को दे रही है एक उज्जवल और सुनहरा भविष्य।
कल जॉब इंटरव्यू है, जरा संभाल के।
भरोसा रखो सर, ऐसा हेयर कट करूंगा, नौकरी पक्की।
कहीं ऐसा ही कुछ आपके इन्वेस्टमेंट के साथ ना हो जाए। अपनाइए भरोसे की चॉइस और स्टॉक्स, म्यूचुअल फंड्स, आईपीओज में इन्वेस्ट कीजिए बिंदास। डाउनलोड चॉइस फिनेक्स टुडे। Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
All right, now markets may be slipping gently towards the day's low. What do we have from agencies? Let's look at it. Japan mulls gone. No, something to do with defense in Japan. Japan to mull next generation fighter exports to Australia and India. I had no idea Japan was making aircrafts. I mean, I used to always think that it's the Americans and the Europeans which in a sense are dominating the fighter jets. And you never thought through it. I've never heard anybody using Japanese aircrafts actually for combat. Yeah. Japan is Japan. They're full of surprises. They're really full of surprises. Amish Agarwal joins us, Head of Research with Prabhudas Leeladhar. Now, there seems to be this huge view in the market that time to revisit defense stocks. First, it was missile stocks, then shipyard companies, now drone stocks. Is there logic in revisiting defense stocks, or this is just hot air and that will also go away? What's your view, Amish?
Hi, Nikunj. You see, as the situation stands today, one needs to differentiate between two things. First of all, there will be some sort of an excitement around defense stocks, given that the country is at war with one of our neighbors. Now, the second thing is that what will be the implications in the near term, medium term, and longer term? Now, if you look at the companies which are going to benefit immediately, say, for example, can you manufacture an aircraft overnight? Maybe the answer is no. Or a submarine, or you can say aircraft carrier, they take years altogether. So in the near term, the companies which are making, say, stuff which is related to missiles, companies like Bharat Electronics, which make consumables, radars, and systems which are used by Army, Navy, as well as Air Force, or some of the other companies which were more on the consumable sides, I think they are the ones who are going to gain immediately out of the present situation. In the longer term, we will have a situation where people have now started realizing that whatever initiatives were undertaken under the Make in India, you can say, creating a long, you can say, the back end and supply chain. So all these initiatives will be taken forward in future also to strengthen the overall security situation in the country. So in the near term, I think the biggest beneficiary could be Bharat Electronics purely in terms of numbers. But in the longer term, I think all the major leading defense companies are going to benefit. But having said that, in the near term, one should be cognizant of particularly how the valuations are and how one should play out on these stocks.
Drone attacks. I'm sure by now you and your team must have done work on which is a company which could benefit if the modern warfare is now moving from tanks to artillery to drones. Are there any specific companies which you've identified which could be indirect beneficiaries of what's happening on the geopolitical front?
You see, as I said, currently we are covering 3 different stocks. Your
drone specifically, anything on drone specifically, which is not in your coverage area, but you know they're doing the right things.
See, you can look at, say, companies like, for example, Tega is there. If you look at, say, specifically drones, so I recall there are, say, a couple of companies which are listed in India, but not someone which is very, you can say, specific specific to the current situation, because the drones which are being used today by, say, your Indian establishment, they are more like Israeli-made drones. So I don't think there is an immediate, yes, there could be some companies supplying components or warheads and all that, which might benefit companies like, say, Bharat Dynamics. Okay, but otherwise, no specific drone player I would be able to, you can say, figure out at this point of time.
Through the markets right now, we are gliding towards the day's low. Amish, somewhere do you think we should all be very happy and delighted? And when I say, I'm just talking about the market reaction here. No one is happy with what's happening on the geopolitical front. I just want to clarify that. But do you think from a market standpoint, the resilience has been excellent, and it has been quite encouraging that there has been no fall in the market?
You see, I would look at it in two ways. Whether, first of all, we are going to have a, say, short war or long war, that is first question, which we or the market needs to address. And the second thing is, what could be the financial implications for that? Now, even if we have a short war, say for the next 3 to 6 months, we are going to get a hit of this, definitely. Now, why the Indian markets today seem to be more resilient is the fact that, say, as we discussed last time, that the rally in Indian markets were far lower than what it was happening in some of the other markets. And as of now, based on whatever the situation is, people are of the view that it will not be long war, and you can say the impact on the economy or the loss of material infra or anything is not likely to be very significant. So till the time the market is in this kind of a mode and we don't have any big negative news coming, so I think that is what is reflected in the moves of the market today. But I think the situation is quite fluid, and we need to be very careful for the next few days.
I just want to get back to the defense pack because, you've got a BEL which is holding up so smartly. This has been, of course, a traditional favorite. So has been a Cochin Shipyard, a HAL, etc. But if you were to buy any of these stocks afresh, where is it that you have valuation comfort?
I clearly see a possibility of earnings upgrade coming in BEL, particularly for FY26. Because they are the supplier of the maximum number of consumables to, you can say, Indian defense establishment. Over the medium to long term, will now the numbers of the order books, etc., for whether it is Cochin Shipyard, Mazgaon Dock, or HAL improve over a period of time? The answer is yes. So near term, Bharat Electronics will benefit. In the longer term, they will benefit. And I think whatever is happening, the fancy and the P multiples of these stocks will remain quite healthy. And Bharat Electronics, I think, if someone wants to trade on what is going to happen in the near term, to me it seems to be the best and the safest stock at the present juncture.
Okay, just looking at the construct of the market today, and of course there's Titan, there's L&T, there's BEL. These stocks are all holding up very well, and then there's Tata Motors as well. And Amish, clearly, Tata Motors has been a laggard in terms of some of its other peers like an M&M. At least so far this year, we've seen that play out. Now with this UK, India and UK, USA FTA getting signed, how much of a fillip does it really turn out to be for Tata Motors, especially when it comes to JLR and Land Rover?
I think that is what is reflecting in the strong bounce back in the stock. Because, for example, if you import today any vehicle from JLR, the duties are, you can say, very, very low. Although India, if you look at the average price of those products and the size of the market, it might not be that meaningful as of now. But when it comes to the export from particularly UK to US, that could be something which is very significant. And given the fact that they have got very, you can say, favorable situation over there. So I think that is something which is getting reflected. And given the fact that the stock had actually corrected by 30 to 40% from the peak, the stock is actually now gaining ground. And if the demand in the US remains good and they are able to capitalize on the low tariffs, I think this stock would have more legs to move.
There's a lot of news coming in, and I'm going to stay with this, please. This is source-based information which we are picking up from wires. Amish, you may want to pay attention to this when I speak and when I read it out. India is asking US for exemption from all and future amid tariff talks. So there are two parallels in the market. One is the geopolitical tension. You may use the word in small, war. And second is trade war. India offers to slash tariff gaps by 2/3 in a dash to seal a trade pact with the US administration. India offers to slash tariff gap with US to under 4%. Under 4% from nearly 13%. India offers zero duty and 60% of tariff lines to US with 3% tariff lines now under potential pact. Now, what do you import from US? Let's bring that list out and put it on television. Well, you import energy, you import defense equipment, you import medical equipment. What else actually? Gas, energy, medical equipment, agriculture commodities, which I think is tricky, and the big change here would be for importers who would, so energy does not change anything. Why? Because in energy in India, as it is, you import anything. You import from Middle East, you import from US, that's more like a government or a bilateral decision. But in terms of individual companies, there are high import entry barriers in the car sector. For example, Tesla 110%, motorcycles very high, especially Harley Davidson. Then very high tariff barriers are there on medical equipment. Stent, which is used by heart patients, MRI machines, CT scanners, large equipment or medical equipment which is made in US currently in India attracts a lot of import duty. If that is changed or slashed, I don't think it will have serious implications because there is very little import substitution which was being done in India because of duty protection, excepting stent and maybe some medical devices. But barring that, nothing much. Agriculture, I'm not so sure if something will come. Is the US president speaking somewhere? Do we want to cut across to it? I mean, is there something fresh which is coming up or this footage? Guys? Okay, are we cutting to it or this old footage? Okay, the old footage, beg your pardon. Okay. Amnish, how do you want to react to the flashes which are just coming on the screen?
Yeah. So, Nikunj, as you rightly dissected that what we actually import and export from US. So when it comes to imports, we are importing energy, we are importing medical equipment, then a lot of, you can say, defense equipment. And you see, all these things, we will be importing either from US or from some other country because you are not manufacturing it over here. Now, the tricky thing could be only two items. One is agriculture and another is dairy. These are the two items where India had very high duties and where it is not now right from the time of WTO when it was formed and the agreement was signed. These were the two areas where there were a lot of, you can say, disagreements on Indian subsidies to agriculture and the kind of tariffs which India had imposed to protect its farmers as well as the dairy farmers. Now, for example, you look at, say, Harley Davidson or a Tesla, all these premium products. So they are not the mass items in India. So even if you slash duties, will you be having a condition that, for example, you sell, say, 2 lakh your Harley Davidson over here? The India is not a market of that kind. So to the people in general, is it going to have major impact? Is it even going to disrupt a your Royal Enfield? I don't think so. So where the things could actually become material for India is that even if you slash duties on some of these premium products, none of the companies is going to get a big hit. That is one. And when it comes to the export side of it, if we get some concessions, say, for example, whether it is textile, whether it is gems and jewelry or some of the other segments where we are competing with some of the countries which had got the concessional duty or otherwise, we could gain. So I think even if you can say the taxes on some of these items are reduced significantly, there is nothing much to lose as far as India is concerned.
Data here, and this is from when the tariffs were first announced, which is back in April 2nd. We should get a reporter to try and get more details on this. and then, of course, get our researchers as well to try and analyze the individual sectoral impact. So it's PVs largely, like Nikunj was highlighting, because the US import tariff is 2.5%, while India did impose a 70% tariff on US imported vehicles. Network switches and routers, India imposed a 10 to 20% tariff, whereas US imposed none. There was agricultural products, wherein apples, Nikunj, entered duty-free into the US, but India imposed a 50% tariff. And there is rice in husk, wherein India levied tariffs up to about 80%, while the US rate was under 3%. So that's the data at least I have as of now.
There is a gap of about 13% if you look at what India exports to US versus what India imports from US. What is India's largest export? Keep services aside, it is pharmaceuticals. So that's about 10% base traffic what you have. Now it could go to 26, but pharma actually has been exempted. What is the idea of this entire trade imbalance, trade rebalancing is that US does not want to have a trade deficit. The trade deficit can easily be curtailed by increasing exports from US to India. That could happen in the area of defense. That could happen in the area of agriculture. That could happen in the area of, let's say, gas, energy, large items which in a sense US is either capable of manufacturing or they're naturally best, which is an area of, let's say, gas. Can easily import from gas instead of getting from east. You further go down, get from US. Those things are manageable. However, if the tariffs in Indian merchandise export remains low, that means for pharmaceutical, for gems and jewelry, for garment, after the US FTA which has been signed, I mean, these are big deals which are happening. Just imagine.
So there was textile and apparel, wherein India exported over $8 billion in textiles and garments to the US, and this is data as of 2024. There's pharmaceuticals and APIs. And of course, it's largely exempt under the executive order, but medical devices, like you said, was not covered by the exemptions, and they were up until now at least impacted. We're actually just waiting for any confirmation. This is just source space info that we're picking up from the wires right now. And then, of course, there was information technology, electronic components, smartphones, routers, switches, which of course is a very, very big and growing segment. Agricultural products, India exported fish, shrimps, non-basmati rice, vegetable extracts, and of course oils as well to the US, which was worth about almost $5 billion. And then automotive components and two-wheelers, which were of course exempt, but there was, of course, high tariff there as well. And when it came to IT and electronic components, which of course is the very growing sector, US imposed 0% tariff on similar items, while India was imposing about 0 to 20% tariff. So largely textile and apparels, pharma API, agricultural products and electronic components. And of course, automotive components and two-wheelers as well is largely the big sectors where this news would be sensitive to.
See, Aisha, what will gain automatically, I think, would be pharmaceuticals. Because this whole entire, sword which was hanging on the sector, that could then become 25 or 30. That concern completely fades away. That's one large component. What may go down is, let's stents. In India, there is imported stent, there are local stents. I mean, medical equipment, those CT scan machines, MRI machines, which actually, right now having a large duty. Then Tesla, 110% duty, some compromise will happen there. Harley Davidson, like, Manish was saying that, look, it's not going to be, there's only one model of Harley Davidson that also is about 4.5 lakh rupees. It indirectly competes with Eicher, but that's not like the main appeal for Harley Davidson, that they will come here and they will eat into the market share of Hero and Bajaj, because those are different utility bikes between 110cc, 115cc, where Harley Davidson is actually not present. Amnish, can I say that the go-to sector now could be pharma, at least Indian pharma exporters? Because if there are trade negotiations which will happen for Indian pharma companies also, they should get some advantage now, and fear of a tariff goes away for them.
You see, the fear goes away, but will they incrementally be getting anything in terms of, say, low tariffs or increased market access or not? I don't think that is going to happen. Yes, you can say the sword which was hanging over them, that the tariffs might go up, they might be on the receiving end, so that goes away. That is one. The second could be, I think, the apparel side, because India, when it comes to US, we are strong in the home linen and home textiles, but in apparel, we are not that strong. So I think that could be one segment where we could gain. Pharma would be more like, I would say, business as usual.
Another sector which I think is very local, and I'm just going to change gears from drones to tariff to India. Cement. Why are cement stocks doing so poorly? I mean, this is one sector which was supposed to make a comeback. This is one sector where things are looking up. But if I look at cement stocks, nothing happens there.
See, I think this quarter numbers were per se not bad. For example, you look at, say, all the leading companies. So there was some sort of a bounce back which was visible in the numbers in these companies. But somehow if you look at, say, the past couple of years or past 1 year, the theme around these companies has been that you will be using renewables, you will be having more efficiencies. So all that is going to give you incremental margins. But now, if you look at the history of this industry over the past few years, they have been able to hold on to some of the efficiency gains, but the price increases, they have not been able to make in a very, very proportionate manner. So unless and until we see the profitability of the industry improving significantly, I think there is very limited scope for re-rating to happen. And from here on, I think one can expect only some sort of a secular returns to come. And in the near term, I think this could be one industry, because in the near term, the focus on incremental construction and all that. So I think that can even take a little bit of a backseat.
Point makes sense. Amnish, great to have you today on the show. Thanks for your time as always. Okay, let's take a very quick break on that note. But as we do that, the government is leaving clearly no stone unturned to prevent even systemic failures across the country. Like the finance minister is also chairing a review meeting on cybersecurity preparedness of financial institutions amid rising threat of cyber attacks. Prakash Priyadarshi, my colleague, is here with more details on what is the likely outcome of this meeting.
Yeah, it's a very crucial development coming in. We are learning that the finance minister will chair an important meeting with the public sector banks and other financial institutions in the wake of rising cyber attacks. In fact, this meeting has been called to review cyber security preparedness by the financial institutions. A very crucial development coming in, and going to be crucial on two terms. One, of course, the finance minister will provide certain instructions to the public sector banks, financial insurance companies and other financial institutions to check their system, make necessary arrangements to avoid any such incidents. Along with that, in a second development, we are learning from our sources that the finance minister may also review the current situations, especially in terms of cash management by the public sector banks, claim-related settlements by insurance companies, especially in the wake of ongoing tension between India and Pakistan at the border. So these two developments are very crucial. We're given to understand that the heads of the public sector banks will be part of the meeting, along with the insurance companies. Other financial institutions have also been told to attend the meeting. Along with that, sources are suggesting that the meeting is going to be going to take place later in the day at around 4 p.m. Through video conference, and it is expected that the finance minister will come out some clear statement after the meeting. A very crucial development happening at a very crucial juncture when we are witnessing a large number of cyber attack cases, especially after Pahalgam terror attack, and therefore the government seems to be in action and likely to give necessary instructions to the financial institutions. Back to you.
Indian markets are going to be getting a booster shot.
Hi, good morning. You're watching The Market right here on ET Now.
Indian markets are at an all-time high. You could really pinch yourself to say, is it the same market? All factors align wonderfully well for us.
Nifty is now up a staggering 2,000 points. That impacts the market mood like no other.
First rates will just start coming up on your screen. There's a lot of green on the screen today.
In a world where markets never sleep,
every decision can change the game.
Stay ahead with insights that matter.
From market trends to economic forecasts,
political twist to corporate terms.
Decoded by the best in the business.
For a comprehensive perspective
On markets and the economy,
join me, Vikram Oza, and
Sumita Karir, weeknights at 8 p.m. on India Tonight.
on ET Now, Rise with India.
There's no particular time to rise.
Hello?
The stories that need the right voice.
3, 2, 1.
Hello and welcome. You're watching ET Now, and there is breaking news right there on your screen.
And it's an ET Now news break. Confirm we told you first. This is Cheryl D'Souza with cameraman Akshay for ET Now.
This is why we rise. ET Now, Rise with India.
She provides you with overall outlook of market coverage. With her keen eye for detail and an expertise at insightful interviews, she brings clarity to the stock market and beyond. Ankita Saxena, only on ET Now.
Back with closing trades right now, and we're just counting down to the last lap of today's trading session. Let's just map how the markets have done so far. Sure enough, it's been a little bit of a choppy ride, but at 1% of a dip, I would say it's a show of resilience actually at an index level. Yes, there are very individual and few stocks on which the market is holding up. Cases in point being a Titan, L&T, which are both earnings reactions, and then Tata Motors, which has had a one-way move up ever since UK and India talked about FTA. And so is the case with the BEL and SBI, which has been beaten down after its numbers and seeing a one-off up day. But other than that, the breadth as well, although it's opened up a little bit from where it started off, but we still got the declines which are taking over. And sectorally, it's realty, power, cement, infrastructure, financials, textile, technology, oil and gas and autos, which at an index level continue to be sectoral laggards. But Ashi Anand also joins in on the show right now. Ashi, hi, afternoon. Let's address the positives right now. The fact that crude has seen quite a bit of cool off. The fact that Indian markets also have had a very resilient reactions to what's been happening at the LOC. And the earnings so far, Ashi, other than very, predictable candidates, we've not seen very huge disappointments in the earnings so far. Where is it that you're finding fresh investment opportunities right now? Or would you say just wait it out because you don't know how the India-Pak situation is going to pan out, and maybe the market may get a little bit more choppy from here?
Yeah, hi. So firstly, thanks for having me on the show. If you're looking at the market outlook, I think there is a kind of decent combination of both positives and negatives. You did mention kind of oil prices coming down, interest rates have been cut twice, RBI is infusing liquidity into the system, FI flows have kind of turned positive. All of these are kind of relative positives, and also valuations have come off a bit post the recent market corrections. So while there are positives in the market, I think we are still choosing to be a little conservative. We are watching quite closely the entire India-Pakistan LOC situation to really see how that develops. We really hope it does not escalate any further than what we're currently seeing. But that is clearly a near-term uncertainty that can impact the markets. The other important element is just the whole Trump trade aspect is on pause for now, but we really do need to see and understand how things are going to evolve. These are two key uncertainties. You did mention corporate earnings. I think it's fair to say that while corporate earnings, we've not seen any major disappointments, but by and large, earnings have been muted. You aren't really seeing clear signs of growth anywhere. So while the interest rate trajectory has clearly improved, I think before we get a lot more positive, we are going to wait for greater signs of growth to come back, and also some kind of clarity around just how the India-Pakistan situation is going to emerge, as well as what's happening in terms of Trump tariffs.
Yeah, there's also the SIP number which has come out, and there I would, every time I look at the number, I would say bravo. 24,000 crore approximately every month, and this one is net inflows into equities, and then one is SIP flows. Net inflows is a function of lump sum as well as what happens in terms of in and out of the schemes. But bravo guys, bravo, 26,000 crore. This month of April was a tricky one to call. There were tariffs, genuine fear in the world, genuine sell-off in the market. It was not one of those garden variety correction what we saw in the month of April, and despite that flows were strong. February, March, you will say something?
No, I was just saying that I was looking at the classification also as to where the SIP flows have come. And if you look at the categories, Nikunj, large cap fund inflows higher on a month-on-month basis. Small cap fund inflows, again, flattish one can say on a month-on-month basis. Mid cap fund flows, again, just a very slight bit of dip. But flexi cap is where a large chunk of money is been flowing in. So large caps, flexi caps, that's where you've seen the inflows come in.
You want to say bravo again? I'll tell you why.
Yeah,
because
absolutely.
I mean, April was a genuine month. At least first 15 days were nothing short of a horror movie. The tariff come into play and everything just got smoked up. And that's the time, you would hear whisper numbers, oh my God, am I doing the right thing by putting money into into equities? So all that fear of God kind of a feeling was there in the month of April at least. Despite that, flows are strong. And flows have been strong into small and mid cap also. So the turning point, Aisha, is this, that there's a time when FIs were buying, DIs were selling. There's a time when FIs were selling, DIs were selling. Now it's the FI buying and DI buying, no IPOs and no liquidity event, so to speak, which is really having impact on the market per se. I think that's the point I just want to bring out. I want to get Jatin here to talk technicals, and then I'll go back to Ashi again. So Jatin, tell us the technical setup. Things are looking slightly rusty today, or if I may use the English word, tardy for the bulls. Have we hit a peak in the near term, closer to 24,200, 24,300?
Good afternoon, everyone. So, as rightly pointed out, today things are looking a little weak. On the weekly charts, today we have the weekly closing. So on the weekly charts, it's forming an engulfing bear candlestick pattern. So technically, it's a reversal pattern. We have seen 4 weeks of up move, and thereafter around that 61% retracement level, 24,500, we are witnessing sharp selling pressure. So technically, a bearish pattern is being formed on the weekly charts. Apart from that, the India VIX is closing above 21.5 levels. So that is again a sign of near-term volatility. So what we conclude here is that yes, things have been there has been a weakness news flow which is leading to this weakness, and structurally also we have a bearish pattern in formation. So yes, on the downside, the next crucial supports that we are expecting is 23,500, which coincides with the 200-day exponential moving average. So that is the near-term support area that we are looking out for. And on the upside, we believe that 24,200, 24,250 is likely to act as a very stiff resistance going ahead. So these are some of the parameters that we are closely watching out for over the next few trading sessions.
Ashish, so you do manage a fund which I remember invests in digital companies. After the recent run-up, what's your view on stocks like Paytm and Zamato?
So this is a space, we really see this as one of the most attractive investment opportunities of the decade. I think more than kind of the recent run-up and what valuations are right now, if you just step back and understand what's happening at a larger macro level, new age digital tech businesses have the ability to kind of create solutions for consumers that are much more efficient ways of transacting than traditional ways. It is much easier to order food on Zomato, Swiggy as compared to the traditional way of calling the restaurant and having a delivery person from the restaurant deliver food. The same can be held true for kind of payments via Paytm or PhonePe, booking a cab via Ola, Uber. You're seeing a massive value migration away from traditional businesses towards these new age platforms. And this, according to us, is something where you're still in relatively early stages of. We see this kind of supernormal growth, the 20-25% kind of very consistent high growth rates of these kind of platform businesses sustaining well into the coming decade. These businesses have already turned into very large businesses. And if you continue to compound at this kind of a base at these very high rates, these are going to be some of the largest companies in India. The growth is something which I think a lot of people do understand, but what a lot of people do tend to underestimate is just how significantly profitability of these businesses can kind of improve as these businesses mature. There are very large parts of the cost structure that are specifically linked to this current hyper-growth phase. As you move into some level of maturity, the kind of levers that these companies have to both increase monetization, reduce costs, and overall improve margins and cash flows leads to kind of, if you look at kind of our profitability projections 5-7 years down the line, they're very, very healthy in terms of levels of margins, level of cash flows, etc. This combination of supernormal growth and a shift towards high levels of profitability are a very strong combination of kind of value creation. And therefore, we believe this decade is really kind of, this is the decade for kind of digital platforms to kind of generate value and create wealth for investors. Now, within that context, while they were available quite cheap a year and a half back when we launched the fund, and valuations have kind of gone back towards kind of normalcy, even a bit expensive. But given the kind of overall growth outlook that these companies have, we continue to see this as a very, very attractive longer-term investment opportunity.
Okay, scanning through the gainers and the losers today. Just bear with me for a second. There you go. Not too many. Just bear with me, sorry. Drone companies have gone up today. Yes Bank has gone up today. There is constructive price action in Apollo Microsystems, Wellspun Living. The whole tariff is at play. The big outlier for me today is Yes Bank. And Jatin, technically, how's Yes Bank looking on the charts? It's a stock which, in a sense, is the most active stock when it comes to the retail activity.
Yeah, see, if I look at the near-term charts of Yes Bank, it has managed to surpass the 200-day moving average and it's sustaining above that. So I believe that there is scope for further upside in the counter towards 22, 22.5 levels on the upside. If someone is taking fresh long positions at current levels, then he should maintain a stop loss of 18.5 for his long. So yes, there has been strength in today's trading session. We expect the momentum to continue on the upside.
Yes Bank, there's L&T, and Jatin, I want to get you in on the charts of L&T as well, because this has been a rank underperformer. After the earnings, you are seeing a big move on L&T, but does it seem like the breakout is going to sustain?
See, in the case of L&T, we believe that yes, there is upside towards 35-30 on the upside. So we believe that yes, there is still more room of around 2 to 3 odd % in the case of L&T, even from current levels. The breakout that has happened today is sustainable, and we are expecting a move towards 35-50 on the upside.
Swiggy numbers are also due today, and good old comparison between Swiggy and Zamato will always happen. Now, you got to bear in mind that Zamato numbers were not extraordinary. Slowdown happened in the food business, and Blinkit is going to be in this investment process, which means that for next 2 quarters, we may not get anything large in terms of a big surprise coming from there. Ashish, is it time to flip Zamato to Swiggy now? It's available at a 50% discount.
So we're not very sure. As in, we find both of these as very attractive kind of plays. Food delivery obviously is a business which has matured and is very attractive from a longer term perspective. Quick commerce is something where it's really a extremely scalable and a very, very large business opportunity. Now, when it comes to kind of quick commerce, investors are going to have to contend with losses increasing in the near term. Our own assessment is that the next 2 or 3 quarters, losses are going to increase. You've already seen kind of for Blinkit it go from about 100 to about 180 crores. We believe losses could increase further as these companies continue to kind of roll out aggressively and really try to capture as much of market share as rapidly as they can. But this is really the kind of digital playbook when there are these large opportunities that can be serviced by digital platforms. It is a kind of very often a winners take all kind of market. These markets tend to evolve into strong kind of duopoly or 3 or 4 key players that control the entire market. It's a multi-billion dollar opportunity. You're looking at kind of a shift of overall grocery and various other consumer segment spends towards quick commerce. So it's a space that we believe these companies are going to continue to invest in, but has the potential to create a lot of value going forward. When it comes to kind of Zomato versus Swiggy, that 50% plus discount that a Swiggy kind of trades at to a Zomato is probably kind of well deserved. If you look at the relative kind of growth momentum, different levels of profitability, right? And if you just step back a bit, Swiggy was the first to actually start food delivery. Zomato's moved ahead of them. Swiggy started Instamart before kind of Zomato went out and acquired Blinkit. Blinkit is considerably larger than Swiggy's Instamart as of today. Profitability on both the food and the kind of quick commerce business for Zomato is superior to that of Swiggy. If you actually take into account the differential in terms of scale, the differential in terms of profitability levels, and also overall execution, the 50, 55, 60% kind of a valuation discount, according to us, is broadly appropriate. At kind of current levels, we hold both Zomato and Swiggy in our portfolio. We continue to see both of them as very, very attractive longer term plays, but it's not between the two. We probably still have a slight preference over Zomato. But if Swiggy were to be able to get its act together and to narrow the kind of execution gap to a Zomato, this valuation discount could clearly have potential to reduce.
Actually, so good having you on the show today. Jatin, you too, thanks for your time as always. Just 2 minutes left to go before we wind up for the day and the week, and I'm going to quickly hand it over to Snehi for the closing trades.